What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So a few of you have asked me what my thoughts were on Virgin Galactic as of late. And so it's time to check in. The stock fell further this week with a loss of 10.16%, bringing our post-reverse stock split losses to over 50% and the year-to-date loss to 87.18%. Not very encouraging. And so in today's video, I'll go over the latest news around the company, then go over the analyst ratings, some major changes here, and I'll close with my personal thoughts as well as what I'm personally doing as far as buying, holding, or selling. As always, this is not to be taken as financial advice. I'm not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on anything pertinent I will be sharing. Drop the video a like if you haven't already, and smash that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. The Virgin Galactic stock keeps falling, and if you recall, this is something I had told you to expect post-reverse stock split. As I was listening to this past Q2 earning call, management painted this elegant picture of their economic model and the tremendous opportunity that lies ahead once the Delta fleet enters commercial state in 2026. And as you can see on the screen, it is quite the attractive model. I absolutely agree with that. We're talking $450 million in revenue with a 20 to 25% margin initially with a two-spaceship fleet. That then doubles to nearly $1 billion in revenue with up to 50% margins by 2028 once they double their fleet size. By all measures, this is the type of growth numbers that investors should be fighting over to have a piece of the pie. But yet, that is not reflected in the stock price. This very question was raised during the call, and here's what Michael Koglazer, Virgin Galactic CEO, had to say. Take a listen.
We would agree that the value that is being built into and created by the company is not accurately reflected in the market capitalization value that we currently are seeing. So what is in the way? Well, what are the risks that I don't think are in the way? I don't think technical risk is the question because we've proved that out with Unity. I don't think it's a safety risk piece, which is what we were demonstrating with all of our flights over the last year. It's not regulatory risk because we've worked through that with our spaceship Unity. And it's not product market fit, it's not customer risk because that's shown to have great value. So what's left in that piece is primarily driven by execution risk. Are we going to finish the work that we have and get that done in time and pace and physical discipline so as not to create financial risk?
Execution risk is indeed the biggest concern most people have with Virgin Galactic. I would highly recommend going back and listening to the full answer starting around the 28-minute mark. That said, besides the 3 mitigation points he highlighted, and I'm paraphrasing a bit here, so internally tracking their progress to deliverables very closely, building buffer into the timeline so they can over-deliver on their promise, and investing heavily today to ensure they can reach the future they seek. So in addition to those 3 points, I would like to highlight a couple of additional points when it comes to Virgin Galactic's execution. First and foremost is their journey towards profitability. As you can see on the graph here, they have consistently beat expectations since Q2 of 2023. That is due to a combination of improved management of their cash burn and increasing revenue with each flight. Along those lines, they've also demonstrated the incredible pricing power they have by raising their per seat price from $450,000 to $600,000, and most recently were able to charge as high as $900,000 per seat on Galactic 7. The point is, customers are willing to pay for the experience Virgin Galactic offers because they have demonstrated that they can indeed execute and deliver time and time again a safe and worthwhile experience. My second point is around cash burn. I previously told you that simple math told us that Virgin Galactic did not have enough cash on hand at the close of Q1 this year to sustain operations at the current cash burn rate and still reach commercial state in 2026 with Delta. That is something that they have now remediated. As a reminder, they closed Q1 with $867 million on hand. Q2 cash burn was around $114 million, and they closed Q2 with $821 million. The difference then is $68 million, to which Virgin Galactic acknowledged on the call to have raised additional capital during Q2 through an at-the-market share offering. The bottom line here is this. With this cash raised, they mitigated the biggest risk they had when it comes to execution, and that would be the risk of not crossing the finish line because they ran out of funds. Now, even though that all sounds great on paper, 2026 is still a long ways off, and quite a bit could happen between now and then, right? It's for that very reason that Morgan Stanley analysts downgraded Virgin Galactic to a sell rating and cut their price target from $35 down to just $5. That's a massive cut. And the reason given, and I quote, "The stock's year-to-date slide, down 85% approximately, reflects the realization that the business model, attractive economics, are premised on delivering a new fleet on schedule and at cost." And they go on to add, "Successful production of the first 2 Delta ships and their ability to sustain high-frequency flights must first be proven to realize Virgin Galactic initial fleet economics," end of quote. So definitely still a lot of skepticism here. Other analysts have also revised their price targets. Sentiment around the stock is definitely more pessimistic now than it is optimistic. And as it currently stands, the consensus rating is a hold. The distribution is made up of 6 ratings, still just 1 buy rating, 3 hold ratings versus 4 prior, and the 2 sell ratings. The high end of the range has dropped significantly from $70 to now just $7. The low end also took a serious hit, dropping from $15 to now just $1. The average price target, previously at $36.40, now sits at $4.75, meaning that analysts are expecting more downside as it currently stands. The last time we spoke, I did say that those double-digit targets were too optimistic, right? Given that we had no upcoming flight and more dilution to come. And here we are now, right? And so really, analysts have essentially only caught up to where I expected we would likely need to land near to midterm. This then brings us to my thoughts on the stock. And as you can tell, I'm not bullish near term. In fact, I expect more downside, at least through the end of Q1 2025. Now, that's not to say that I think we're doomed and all hope is lost. It simply means that things will take a little bit longer to reverse. As we get into the ground testing in Q2 2025 and flight testing in the second half of 2025, assuming we keep on track, momentum should return. And there is at least one bright spot to highlight, and that is the fact that Virgin Galactic has nearly completed their previously approved $400 million at the market offering. As stated during the earnings call at the end of Q2, they had raised $394 million of the accessible $400 million, meaning that share dilution has now essentially peaked, and that in itself is a major win. But with the lack of catalyst until next year, it will be easy for short sellers to try and pressure the stock lower over the next few months. The bottom line, and really the last thing that I will say here, is this. Virgin Galactic has secured enough financial capital to cross the chasm and deliver on their vision. They've also proven that they can indeed execute. That said, the Delta class and tooling required to build and assemble it are all new designs, or at least new iterations that have not yet been tested. We are still a year away from getting clarity and assurance, and the key here is that assurance that no unforeseen variable will arise leading up to the Delta flight testing, causing a greater delay than the current plan can absorb. And as we all know, any negative news or delay will drag the stock price lower. So for me, even though it is still too risky and too early to add more to my current position, I also believe enough in the path they have laid out that selling the rest of my position here is not a valid option. So for now, I will continue to hold and track their progress as I look for hints of an early signal to once again turn bullish. But on that note, that is it for me today. If you found value in my content and feel so inclined, check out the thanks button under this video. Remember to click the like button and share with others who you think could also benefit from it. For my newcomers, subscribe. It's free, and don't forget to ring the notification bell so that you too can stay in the know. I'll be back next Sunday for my weekly video, and possibly during the week for an extra one. Until then, you can keep up with me here on X for crypto and NFT related news. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.